Hi, and thanks for tuning in. I'm Sean Gribbins.
And my name's Brandon Wilkinson. We're both real estate professionals who work with buyers here in the Denver area.
We've set up this webinar to give you exactly the information you need to start your home buying journey.
Being a former teacher, I've always valued education, and I'm excited to partner with Sean to continue teaching buyers about important topics in an exciting new space.
So bear with us as we start the webinar here and jump into the slideshow.
Well, thanks for joining us again, guys. We're going to go ahead and go over the home buying process. I just want to introduce the two presenters here today. My name's Sean P. Gribbins. I'm a realtor. I'm the guy there on the right picture. I'm a first-time homebuyer specialist, and I'm here to help you find a house. And I'll pass it over to Brandon. Brandon, you want to introduce yourself?
I would love to. Yes, my name's Brandon Wilkinson. I'm pictured there to the left. I'm a mortgage loan officer with AmeriFirst Financial. Our office is just north of the Bronco Stadium. So me and Sean work all over Colorado, but predominantly in the Denver area. I used to be a teacher. I've taught for many years. I taught math both in Florida and in Denver. And once I was ready to kind of transition, I wanted to go into a career where I could continue to educate people, and the mortgage realm just seemed like a perfect fit for me. So, yeah, thanks for joining us, and enjoy the content.
Cool. Well, we'll go ahead and get started. So really, guys, throughout this slideshow, we're going to go over kind of the steps of buying your house, buying a first home in Denver, whether that be a home, condo, or townhome. So I'm going to kind of be talking about the process, and Brandon's going to be talking about how and where to get the money from. So without further ado, guys, really the first step is, one, to contact a realtor, to get in touch with an agent who specializes in first-time home buying. So pretty much everybody who buys a house, their journey starts and ends with their realtor. 90% of homes bought and sold every year are professionally done so through realtors. And we're really here to guide you through the home buying process. We're here to kind of hold your hand and walk you through the process. It's a complex process. There's a lot of pieces involved. There's a lot of people involved. And my job as a realtor is to really organize everybody and make sure things are going smoothly and legally for everyone involved. So just some of the things that we do are set and schedule personal showings for you for those properties that you want to go see. We prepare and write contracts. These are legal contracts, so it's super important someone knows what they're doing when they're writing them. We negotiate for you. We schedule inspections. We work directly with your lender, someone like Brandon, to make sure there's a smooth lending process and just a smooth overall home buying process. And really, we help to get you from start to finish when buying your dream home. So, two, we'll move on to financing. This is really where Brandon's going to come in. This is kind of one of the most important parts, is really where are you getting the money from. So, Brandon, I'll let you go ahead and take over.
All right, sounds great. Thank you, Sean. So, let's begin by talking about loans. So I come in when you can't buy a house with cash. Okay, a lot of people don't have, maybe $300,000, $200,000 in cash, so they need to borrow a percentage of that to purchase a home and pay it back over a period of time. Okay, so loans usually fall into two categories, fixed rate and adjustable rate. If a fixed rate scenario, the rate is the same for the entire life of the loan. So let's say it's 4.5%. That's the rate that you're going to start with, and that's the rate that you're going to end with. It's very stable. You know exactly what your monthly payment's going to be. The only thing that might change is taxes and homeowners insurance. The other category would be adjustable rates. So the rate is locked for a period of time, let's say maybe 5 years. And once those 5 years are up, the rate will change based on how the market is then. It can go up. Okay, and interest rates are usually lower because the banks are willing to take that gamble that after the period of time, the rate is going to be higher, and so they're going to maybe get their money back at that period of time. Okay, these are perfect if you know you are going to be moving. So let's say that you're living in Denver now for, you're going to be here for 4 years. You have plans to move back to the great state of Florida where I grew up. You're going to be out of here in 5 years. An adjustable rate mortgage could definitely save you a significant amount of money for that period of time. Okay, and then both fixed rates and adjustable rate mortgages have terms. Okay, and that's just how long these loans are going to be, whether they're 10 years or 30 years. Okay, the shorter the term, the lower the interest rate is going to be. So maybe a 30-year mortgage is 4.5%. 15-year mortgage might be 3.5%. Okay, you're going to pay less in total interest if you go with a shorter loan, but your monthly payment is going to be higher, because you're going to pay the entire amount of the loan back in a shorter period of time. Okay, and so now let's talk about the different loan categories. The first loan category is FHA. Okay, FHA is a federally insured mortgage. They're predominantly for people who, might not be in the best scenario in terms of credit, or might not have a 20% down, 20% to put down. I myself have an FHA loan right now. I bought a house through a unique teacher program, so an FHA loan was required. The credit scores start at 580. 3.5% down is the minimum unless you're using a down payment assistance program. That 3.5% can also be gifted from an appropriate source. I see this frequently. Family members want to help out. Either the entire down payment can be gifted or a portion. Mortgage insurance. And mortgage insurance protects the bank. So if you all of a sudden can't pay your mortgage anymore, the banks can actually pull out an insurance policy to cover that mortgage. Okay, and FHA loans, because they're not 20% down, same with conventional, there is that chance that maybe somebody could default because they just don't have that much in the bank. And default just means to stop. You just can't pay your mortgage anymore. In order to remove that mortgage insurance, you have to refinance. And FHA usually has the lowest interest rates out of the four categories. The next category is conventional. And conventional, the credit scores start at 620. The minimum you can put down is 3%. The mortgage insurance will fall off once you have 20% equity in the home. So that means that you've paid down your mortgage to the point where you own 20% of the house, the bank owns 80%. Okay, if you come in to a conventional loan and you can put down 20%, you will not have any mortgage insurance. Okay, so conventional loans are great, another great option. The next two types of loan category is VA, so Veterans Affairs. These loans are reserved for people who have served our country. The credit scores start at 620. Veterans have the options to put 0% down. Okay, so if you have no money in the bank for a down payment, you can buy a house if you're a veteran. They do not come with mortgage insurance, and the closing costs are usually less than a conventional and FHA loan. The last type of loan is USDA. These type of loans are reserved for rural areas. Credit scores start at 620. Another option to put 0% down. And eligibility really depends on the geographic area. We don't really see a lot of these in Denver, but in counties like Weld County in the northeast, there's a town called Strasburg that's starting to gain a lot of attention, just east of Denver. There are a lot of USDA loans. There's a lot of area that's eligible for these type of loans there. All right, now let's talk about qualifying. How do I become approved for a mortgage? First thing we always look at is your employment. Okay, do you have 2 years of work? Okay, the big thing for lenders is we need to be responsible. We need to be putting people in scenarios that we're being responsible, they're being responsible, they can pay back their mortgage. Okay, we don't want to put people in a scenario where they are going to foreclose. We're held to restrictions and requirements to do that. So the first thing we look at is employment. Have you been working for 2 years? W-2, 1099, we're going to look for 2 years as well. The exception is that if you've spent time in school. So if you have spent time in school to become a teacher, you have got your 4-year degree, you get a job, a lot of times we can use a 1 year of employment. Even in doctors and I believe in attorneys, we don't even need any years of employment because we know that the time that you invested into your education is going to provide you with a very stable job. So a lot of times all we need is just a contract that you're going to be hired, and we can work with that. Well, we always use your gross monthly income, so before taxes are pulled out. Another thing that we look at is your debts. Okay, so we really just look at what your monthly debt is. So if you have $100,000 in student loans, but your monthly payment is $300, we look at that $300, not the total amount. Responsible lending allows for 50% of a person's income to go to all debts. Okay, about 50%. Sometimes we can go a little higher. Sometimes it's a little lower. Depends on the person and their scenario. What we do is we take their monthly debts and we divide it by their total monthly income. So what do they have coming in, and what do they have going out? And this percentage will be used to determine qualification. All right, so let's say, in an example, let's say that you have $100 of monthly debt, okay, but you have $1,000 coming in. So we're going to divide those two. So 10% of your income goes to your monthly debt. Coming back to the responsible lending, this person can handle 40% more debt. So their house payment could be $400. And then we kind of work back from there. Okay, and we figure out, okay, what is $400 spread over maybe 30 years? Okay, that can afford a house price of X. All right, Sean, go show them some good stuff. The other two things we look at are credit. So credit is your financial reputation, okay? It shows, okay, I've paid all my bills on time, my credit cards aren't maxed out. Okay, I have a really good financial reputation. 580 is the minimum that we can work with to qualify you for a loan. Oftentimes, people come to me early, and maybe their credit score is in the 550s, okay, and they plan to buy a house in a year. They are doing the exact right thing because I can work with them with our credit repair team to figure out, okay, what went wrong? All right, let's figure this out. Let's get this all sorted. And so by the time their lease is up or they've been able to save up enough money, they're then not starting at zero. We've already prepped them, and it's going to be a smooth transaction to get them to the finish line because they've already done the legwork up front. So I always tell people, pull your credit early. It's free. We have a team that can go through it line by line with you. We can get you the help you need so we can get you ready to buy your own home. The last thing we look at is your assets. So what do you have in the bank? It's not always required to have money in the bank, but it does make you less of a risk. Okay, so if you have maybe $10,000 in the bank, it looks good because if something happens, if you lose your job for a period of time, you do have this buffer that can help you out in times of needs, okay? So we can look at checking, savings, and retirement. A lot of people don't have any money in the bank, but they have huge retirement accounts, and that looks great on paper. So those are the four big things that we look at. All right, another big question, down payment options. Okay, if you're interested in down payment assistance, there are many options. All right, usually the minimum is going to be 3.5% for an FHA or 3% for a conventional. But if you don't have that, like I said, there are many options, but they depend on credit score and income. Some of these programs offer just $1,000 down. Some programs offer $0 down. Okay, some can cover closing costs as well as the entire down payment. Some require a repayment while others do not. So, like I said, if you are interested in utilizing a down payment assistance program, get in touch with me. Let's go through the questions to complete a loan application. It's free. And then once I have your complete scenario and your complete profile, I can go and do the research to figure out the best options for you, and we can proceed accordingly.
Well, cool, Brandon. I'll take back over. That was awesome. That's kind of, for you first-time home buyers, that's really the biggest piece of the puzzle is finding the money. That's kind of what starts the whole process. So someone like Brandon is going to be a key person to go to when you're first starting. And I'll just give another little credit here to Brandon. He has so many different programs for first-time home buyers. It's unbelievable. They're really able to get so many people qualified. People that I haven't, that other banks haven't been able to qualify, they're able to. So Brandon's probably the best person to go to for these types of first-time home buyer loans. But continuing on with the process, we'll start talking about actually physically going out and looking for houses. So once you've gotten the approval from Brandon, Brandon says, hey, you guys can borrow $350,000. You're approved for this amount. Then you come to me. We take that letter that Brandon gives you that says I'm approved for this much. and we start going and looking at houses. So I set you up on a custom home search. We talked about things that you're looking for, such as beds, baths, size of the house, the style, whether you want a condo, a house, or a loft. There's all kinds of options throughout Denver. So we set up you a really good search that is pumping you properties every time they're listed. And then we're going to go out and physically look inside those properties. So one of the things I talked about earlier was your agent's job is to set showings for you. So your agent will set those showings on the houses that you'd like to see, and will also attend those showings with you, walking you through the house. If you have any sort of questions or things like that, your agent's there. You can easily ask and get them answered. So once you've looked at a few houses and you've kind of thought about what's going to be best for you, you're going to make a decision. So when you're making a decision, you really need to pay attention to the things that are important to you, like I was talking about earlier. Number of beds, baths, the essentials. Things that you don't really need to pay attention to is the color of the house, the furniture that the people have in there. Once you own the house, you're able to paint, you're able to move your own furniture in, you're even able to knock down walls if you want to and make renovations. It's your house. So that's the whole thing, is don't get hung up on certain things. Really look at the house as a whole and say, will this work for me? I can always make changes later. Another thing is no house will be perfect. It's not yours yet. Don't worry about making sure everything is perfect. One of the things people, especially first-time home buyers, get hung up on in the looking process is, Sean, does this microwave work? Does this oven work? Does the garage door work? How good is the furnace? These sorts of questions. It's like, listen, don't worry about that. We have other professionals who are good at inspecting a house who will tell you what kind of condition that house is in and make sure you're aware of any damages or issues that, may be a concern to you as a homeowner. But really, once you found that house, you'll work with me to write an offer, and that's another thing that your realtor does for you is write state-approved contracts and forms. So these forms all have legal repercussions. You really want to make sure you have an agent who's experienced in contracts and knows what they're doing. So basically, that's it. So once you've made a decision, we talked a little bit about offer writing. So like I said, your agent will prepare an offer for you. Another thing that they do is once they submit the offer to the sellers, and the sellers are reviewing your offer, your agent will negotiate for you. So if there's any sort of stickiness, say that you want to close in 30 days, maybe the sellers want to close in 45 days, that's what your agent's there for, is to negotiate, kind of meet in the middle ground, and make both parties come to an agreement so everything works out. So really, once you're under contract, the next big step to getting to the finish line is doing all your due diligence items. So making sure that the house is free and clear, the title of the house is free and clear, no one else is claiming ownership rights, making sure the house is in good working order. This is inspection. This is what we'll talk about. And also doing an appraisal. So without further ado, let's get through it here. So once the offer is signed by the sellers, that means you're under contract. So both parties have signed and agreed to the terms and the price that you guys have written in the contract. So the next step really is to make sure the house is in good working order. You'll do this by working with your realtor. Every realtor has a few inspectors that they've used and their past clients have used. Most of my clients use Bob with House to Home. He's an awesome inspector. He comes through. It's usually a few $100s, but he's going to check every mechanical and part of the home, literally everything from electrical to roof to windows to making sure faucets aren't leaking, that sort of deal. So it's great because you get to really get an inside look from a professional at what kind of condition the house is in. This is another point where if there are problems in the house, you can go back with the sellers, negotiate, get price reductions, or fix things. There's a lot of stuff that comes up in every home inspection report, so it's important to work with the inspector and your realtor to kind of figure out what's going to be important to you and what's not so much important to, once again, meet in a good middle ground and get you that house that you want. So after we've gone through inspection, the next big two ones are appraisal and title work. Appraisal is really where the bank provides the money, and they want to ensure what it's worth, what you're paying for the property. So if you're under contract on a house at $300,000, the bank's going to hire an independent person who will come out, visit the property, and then review comparable properties that have sold in the area. So properties that have sold in the past 6 months, he's going to look at those and kind of compare those properties to your property that you're trying to buy. Based on that, he'll come to a good value of what he thinks the property's worth. And as long as that value comes in at or above what you're trying to buy the house for, you're in the clear. If it comes below, that's okay too, because we can always go back with the sellers and say, listen, the house is worth less than this. Would you be willing to reduce price? And if not, you can always cancel the contract. So there's all these safeties in place for you as a buyer. And then really the next big important thing is title work. So when we're transferring a title, the title comes with a deed, which basically gives you ownership to the property. So what we want to do is make sure that no one else is claiming rights to your home. We use title companies to do this. Like I say, it's a small portion. It's actually an insurance policy that you pay for that covers you while you live there. That way, in case, the next door neighbor comes in and says, hey, wait a second, I have an ownership claim to this, the title company is going to say, no, you didn't when you closed. We're going to cover our buyer for any legal repercussions that may happen. So every buyer pretty much gets this. Even investors get this. But really, we're just making sure for you as the buyer that everything is free and clear, everything is legal, and nothing strange is popping up. And once we've made it through all those due diligence items, the title work, the inspection, and the appraisal, really we just move to closing, which is the best part of the whole process, where you sign a whole stack of papers. The deed giving you ownership will transfer over, and it will be recorded in the county in your name, and you will officially be a homeowner, and you'll actually get the keys at that time and be able to move in the same day. It's awesome. So then that's the whole process, guys. Now, I kind of want to talk about financial benefits, because everyone goes, well, why should I buy a house? Well, there's quite a few reasons why you should buy a house. And really the biggest reason that people buy a house is financial freedom. They want to own something and have a point in the future where they're not having to pay every month to live in their house, essentially. So you're wanting to pay off your house. And a lot of Americans, this kind of is referred to as the American dream. A lot of people will use their house as a retirement plan. They'll put all this money into it. They'll watch the market grow with equity, so housing prices are going up. In Denver, we're seeing this right now, especially. Prices are going up, rent's going up, but the prices will go up, and at some point they may want to retire. So what they can do is they can basically get a mortgage on their house that will basically pull the cash out of their house. That way they can live on that. So that's one option. The other option, too, is a lot of people will just like to ride the equity wave. So right now in Denver, I've had clients who bought kind of 2014, 2015, who are now seeing $100,000, $200,000 gains in their house. So if they were to sell, they would literally get a check for $100,000 to $200,000 just in equity, and that's just because the prices around them are going up. So by living there, it's almost like they're working a part-time job. I mean, it's kind of crazy. Obviously, the market's not always like that, but if you look at a long-term graph of the United States, usually on average, the United States sees around a 3% gain every year. And then, of course, tax benefits as well. You really get to write off all that interest that you're paying on the mortgage, which is awesome. As a renter, you don't get really any of these benefits. As a renter, you are literally throwing away your money. By buying a house, you're at least putting your money in what I like to think of as an account, and you pay that account down, and then at some point, if you want to move on or the market's really good and you want to sell, you can cash that money out. So those are just a few of the financial benefits of buying a house. And then really, that's kind of been the slideshow for us, guys. We kind of want to make it quick. We don't want to take up too much of your time. So I wanted to reach out and say, if you guys are interested in buying your first home, or even if you're kind of in the very first process of thinking, well, is this something that I plan on doing? It would be great just to get in contact with us, just so you guys can set up a roadmap. We're here to help out first-time home buyers. We're completely free. Brandon and I both don't get paid until the loan and the house closes. So we're with you until the end. We don't get our paycheck until the end. So we're really here to help, guys. So just by reaching out to us, here's some of the things that we're happy to offer you. One is Brandon will be able to, tell you how much home you can qualify to buy. He'll give you a complimentary credit check. He also has a credit repair consultation if your credit's not in the best condition. And then me and Brandon can give you a roadmap to get you from renting to homeownership, whether that's, maybe saving a few $100s extra a month to build up the down payment, or talking to mom to get a loan, or whatever it may be. We're here to help. And then obviously I talked about kind of the custom home search that I'll set up. So just by getting in contact, guys, I spend a lot of money on these tools. I'd be more than happy to set you up on a custom home search that links directly with the Denver MLS. So you'll be getting properties as soon as they hit market in your criteria, in your inbox, and you have all the details. So a lot better than Trulia and Zillow if you're looking around on there. Some of that stuff's outdated. And then I believe Brandon's program, which I'll let him kind of talk about, it sounds like it protects your transactions. So Brandon, you want to jump in here?
Yeah, absolutely. Just a unique thing that my company offers, a big reason I pursued this company. They have this neat program called Protect Your Transaction. So if you guys reach out at the right time and we can get a complete loan application, start gathering the required documentation that we need, we can actually start to process and fully approve you as a borrower and buyer just with a to-be-decided address. Okay, so everything is done except we don't have an address or an appraisal. That stuff we can get later on down the road. So once we have you fully approved and fully processed, we can then turn to Sean and say, okay, we know this borrower is a sure thing. We're going to actually back their offer with a $10,000 assurance plan. And so pretty much what that's saying is, okay, hey, Mr. and Mrs. Seller, if something happens where we can't close this loan, we're going to credit you $10,000. Okay, so a seller, that is, there's financial benefits there, but it's also just an assurance plan that's saying, hey, we're really serious. We know this person's qualified. We've already done our work, and hopefully that offer goes farther than others because of this additional insurance plan. So definitely something cool. Definitely something that wins offers in this Colorado craziness. The market can be a little nutty, and it really comes down to timing. So, reach out as soon as you can. Let's get you on that plan, and let's make sure that your offer is worth $10,000 extra dollars. So I'm going to sign off here. Thanks again for joining us, and thanks for giving us your time, and reach out when you guys are ready.
Yeah, thank you, Brandon, for everything. It was an awesome job. And yeah, guys, just once again, reach out to us if you have any questions whatsoever. Our lines are always open. Feel free to shoot us a text or a call. There's all our information right there. Unfortunately, we're trying to keep this slideshow short. So like I said, if you do have questions, our contact information is right there. So please feel free to text us, reach out to us via email, even give us a call, whatever's easiest for you. We're here to answer questions. We're here to help first-time home buyers. And thank you once again, guys. My name's Sean P. Gribbins. It's been awesome presenting to you. We look forward to helping everybody out.